Well, we're excited today to have Mark Underhill join us from BMSS. Mark is the firm leader of their transaction advisory services area, in addition to doing many other things. And gosh, Mark, you've been with the firm long enough to run the thing by now. I think almost 15 years, if I remember correctly.
Yeah, that's
15
right.
years. But if you don't mind, just talk a little bit more about your background and kind of what all your team and your practice specializes in.
Yeah, appreciate that, Mike. So yeah, my background, I came up in the accounting world on the tax side and got involved in several M&A transactions early on, and ultimately grew a practice and specialty out of it. So at this point we've got a number of personnel, but full service, financial tax due diligence, Q of E. Any kind of transaction consulting. We do a lot of work with investment bankers like yourself and with deal attorneys on the specific terms of the deal, the tax implications, the financial implications of those, consulting with business owners that may be looking to sell in the future. How do they get there? We can help with that. And then ultimately, once a deal closes, everything's got to get reported to the IRS. There may be some earnout provisions, some things on the back end of the transaction that we'll help with. So we can always tell folks there's really two things I don't do in the transaction world. I'm not an investment banker and I'm not an attorney, but outside of that, we work with them every day and we can do everything else.
There's a lot of different areas. I know we've worked together from quality of earnings reports to, maybe buy side or sell side, and so number of different angles and different hats that you wear, depending upon circumstances. But could you talk a little bit, and you could talk from both sides, as deep as you want to, around the market we're seeing today and kind of ever changing. Gosh, I know the multiples are a direct impact of the stock market. They trickle down eventually into the lower middle market, and then furthermore, I think is the mix of how deals are getting done. It used to be that private equity shops they could count on the banks and they could count on other debt sources to provide most of the burden there and carry 75% of the funding or somewhere in that ballpark. And it just seems like that's changed a good bit. Yeah. What are you guys seeing in those two?
Yeah, I
Those
mean, you hit on a great word. It's ever changing. The last few years, even kind of pre-COVID, but then into COVID, it's been a little bit of a roller coaster. Now we're in an environment where high interest rates have certainly had an impact on the financing of the deals and just cost of capital. And so it has been an ever-changing landscape. I would say generally in the last year to 18 months, some multiples have come down roughly a turn. So if something was at a 9x, it may be at an 8 now. That said, if it's a quality business that has, is transaction ready and investment grade, and we can touch more on that later, but there's still a premium for those businesses.
you had Mark, you mentioned something earlier around the Q of E report and or quality of earnings report, and I know a lot of why I do what I do and get significance out of it is just trying to help educate the masses, because I think there's a general financial illiteracy problem. Entrepreneurs and leaders, they know how to run their companies and they know how to make decisions, but they usually do it with their fingers firmly on the pulse of their company. But with M&A, they don't really know who to listen to. And I heard it called a long time ago the 5x fallacy. But every business is worth 5x, and that's just, you got to know who to listen to. And so um, the whole idea of quality of earnings. Do you mind just talking a little bit kind of to the business owner out there who they don't understand management financials from an audit to Q of E and kind of all of how that plays through, and ultimately why they should spend that extra money to get one done?
Yeah, absolutely. I mean, when you think, a lot of people correlate a quality of earnings to an audit. And it's similar in that they're both, financial examinations of the company, and you're going through process to understand the numbers, but there's a very different focus. An audit or a reviewed financial statement, the focus from a external CPA perspective is I'm looking at a snapshot, a point in time, beginning and end of year. I want to make sure really on the balance sheet. If I know the balance sheet is materially correct, then the income statement's correct. And there's certainly some income statement analysis within an audit, but it's much more heavily focused on the balance sheet side. Well, when you're going through an acquisition, the buyer is buying your earnings. So it flips the focus on its head, and really now we're looking at the earnings side of it. And I don't want to just look at a beginning and end of year. I really want to understand, the the details of the revenue cycle throughout the year. It really does matter month to month, and we typically look at a 2 to 3 year period on a month to month basis. And so, it's common in lower and middle market companies that there's a lot of maybe bookkeeping cleanup, or the accountants may make some adjustments only at year end. A buyer's really going to care about whether something occurred financially in a period from between May and June one year, even though I'm a December year end. Especially when you're doing a transaction, a lot of times the basis for it is on a last 12 months EBITDA, or earnings before interest, taxes, depreciation, and amortization. It's just a way to quantify the earnings and cash flow of the business.
Mark is hitting on some really important points around the earnings of the company. Accountants, we like to call it EBITDA, but it's really just trying to find out, get to a proxy, get to a number that somebody new stepping into the company could expect. Now there are going to be some bumps, and they're going to have to do things differently, but and so that's where Mark and his team in a quality of earnings report, and just having good advisors around you, will help you to kind of sanitize what your financials are showing. Even if they're done timely and if they're done really well, there's still discretionary things that go through business in the lower middle market, and it's not wrong. It's just the way that it works. I mean, it's people are going to try to jam expenses in toward the end of the year to get tax deductions and defer income, and there's a lot of different things that go in there. And so what I try to do is just to find out what is the number, and then make sure that the business is positioned well to get the highest possible multiple, I'll call it. I guess overall, with everything you're seeing right now, what do you really thinking the rest of this year is gonna look like, Mark? I know got an election coming up, and that's always plays into the markets, but the rest of 24 and even into 25.
Yeah, I mean, it's really been an interesting year so far when I especially compare it to last year. Last year there was certainly a more of a pessimistic outlook. Interest rates were rising every single Fed meeting. That definitely slowed some deals down. I mean, we saw some deals that it just made the economics of it turn. The cost of capital changing so wildly. This year it has been a start to the year that I would say is cautiously optimistic. So far from what we've seen, there's been some really good deals happening. Now, some of them have taken longer, and there's been, additional requirements to get them across the line. But we've been fortunate to work with some really quality companies on both the buy side and sell side that, again, if they're selling, they're investment grade, and if they're buying, they have the funding secured to complete the deal. On the flip side, we've seen some that, the funding for a number of reasons may have fallen apart on some deals that we were selling. So it's even more important, if you're a seller, make sure you've got, a great investment banker, and that they vet potential acquirers to truly understand, getting to the letter of intent phase and having kind of high level deal terms agreed is a significant milestone. But if the partner you choose is questionable on whether they can actually close and have the money to close, that's a significant risk. And so all of that is something that I know Mike and his team and the investment banking community help evaluate. And there's been a lot of value that comes from managing that process, helping get the right buyer in the mix, and ushering it through the closing.
Right. I guess in our last 5 minutes or so, Mark, couple things. I'd love to hear if you can share any stories that you could share just in kind of over the last year or so, what you've seen. People, they say people learn the most through other stories, and would just anything you could share.
Yeah, I mean, I would say every deal has a story. Some better than others, but we had one company that we worked with that I would say was not investment grade. Uh, Felt very positive about the business, felt very optimistic about the future and the growth that had occurred in the recent period, but they weren't ready. The books and records weren't up to date. They discovered some issues in their CRM system and kind of how it talked with their accounting software. We had a significant hurdle to kind of overcome with that, but we helped them do it, and it came to a great transaction. But it was costly. Those kind of things make a big impact, and if they weren't fixed, those are there's a couple of landmines in this industry, from especially an accounting or tax perspective, that can be deal killers. If you don't have confidence in the financials, that can be a deal killer. Um, we've had other deals where there's been just significant value that we've been able to bring from a tax or financial perspective. Those are always, for me personally, very rewarding. We look at it as every one of these transactions, especially if we're working with a seller. Most people only sell one business in their lifetime, and it's their life's work. It's their family's life's work. And so when we can help them realize that dream and monetize that asset that they have been building for sometimes 30, 40 years, when we get to see value we bring, it's just that much more rewarding. And so we had a transaction recently where it was going to be structured one way. We got involved, talked with the attorneys, made some recommendations from a tax perspective, and real quickly we're able to realize a lot of value. I think we had one call that was about a 20-minute phone call, saved the client a $500,000. Those are big wins. I know, Mike, this has been probably 2 or 3 years ago now. We had a deal with you where um, client was using another CPA historically. They were stuck in a C Corp environment and experienced rapid growth during COVID. We were able to help them with some tax elections that saved them millions of dollars. All, legal and above board things, but it took the foresight to kind of come up with the idea and then execute on the strategy. And again, those type of events are very rewarding from an advisor's perspective, to see the value that you can help bring to the business owner and their family throughout the transaction.
Anything else that you would like to get across? I know there's so many people out there, and I'm always very sensitive to the business owner that does not know the questions to ask. They really don't even know who to turn to. They know usually that their attorney is the one that's kind of charged with this type of thinking and type of guidance. But anything that, if you were sitting in their shoes, that you would want to know that might be good to point out right now.
Yeah, I mean, I would say be proactive. This is not an area, again, if I'm a business owner, this may be my one chance to sell a company. I can't sell it twice. Um, you see sometimes where the owner is hesitant to, whether it be engaged, experienced investment banker or accountant, maybe the fees are something that are a roadblock to them. Um, you got to look at that as an investment, and it's one that I would say generally pays off in spades. And we had a client. This is another just quick story. Client reached out a little more than a year ago. Had somebody approach them with an $80 million offer, and every owner's got kind of a, hey, I may not be looking, but money talks, and if I hit a certain number, then I'm good. um, that 80 million is nothing to snub your nose at. And so they asked us the question of what do we think, and we felt like there was more value there. Um, they decided to engage formally with an investment banker. They ran a process. They came away with 30 plus letters of intent, and ended on a deal with 150 million in enterprise value. And so, in that transaction, they paid us, they paid the investment banker, they paid the attorney. Total transaction fees were millions of dollars, and but when they're almost doubling what they thought was even high to start out with, it was some of the best fees that they would say they paid. And again, it was a significant return on investment. And so these are areas where we all in our respective lanes can provide a lot of value. You want to be prepared. You want to have everything together for a smooth transaction, and that'll make for a successful transaction. But if you try to, especially go at it alone, there's just so many areas of this that get complicated, and there's a lot of demands throughout the process that it really does help having a team. And so I would just encourage you to reach out, you know, prepare ahead of time and surround yourself